Maggie Roth here. I see a golden opportunity for the next 3 weeks to make some really great returns. Those of you that follow and subscribe to Investing Buddies know one of my strengths as a trader is predicting the day's price action and the future long-term trends. I do this by following a strict daily routine I call AMO. This is Early Morning Market Outlook. As a subscriber to Investing Buddies, you'll get the training so you too can follow the same or a similar routine. Knowing the upcoming market price action almost guarantees you're going to be on the right side of trades every time. Just putting on the same old trades at the way you've always done it, you're going to get lucky sometimes, but overall, you're never going to get the returns you're hoping for. Here's an example of what I'm talking about. Our 10-week data course just ended Friday a week ago, and so I took my account back to 25,000 in prep for the next data series, which starts on April 20th. This past week, I saw some great trade setups, and I just couldn't help myself. So I placed a few and ended up with a 12% return for the week. Not bad, but it's pretty usual for me. I get great returns by reading the market each week and each day. My insight moving forward is we're going to have about 3.5 weeks of just really nice uptrend. One of my favorite trades is a credit put diagonal spread. I like it because it works in so many market scenarios, but you have to know how to adjust the trades to match the market for success. I teach all about this setup, but I spend more time on trade management of these money presses. First, what is a money press? Well, it's a setup where you buy a position in a future expiration. And the usual expiration you choose is out where the next earnings announcement is going to be. Then you sell put positions each week right at the money. And if the price goes up or stays even, you get to keep all that premium by the end of the week. You just keep repeating this same process of selling each week. And it takes about 2.5 weeks to cover the cost of the long. All the other weeks you sell, they're your profit. And remember, I said earlier that I believe we were going to have a nice smooth uptrend for the next 3 weeks. So I love placing money presses, but the same setup won't work as well. Let's consider Apple. Their next earnings announcement is I think it's on April 27th. And the stock is now uptrending and has broken through a really strong resistance area. If you sell a put for the next 3.5 weeks, you should bring in a credit of about $3.33. The trick is buying the protective put at the right strike. What I do is trade wider strikes between my weekly sold position and the long. And I would choose the April 28th as my expiration. Stock is currently trading at 165.50 and I would choose the 157.50 strike for my long put and pay about $1.81. Potential profit there is $1.52. And that's not bad for 3.5 weeks of trading. There's another possibility out here. What about, and you guys know I love what if questions. What if I traded credit put verticals each week instead of a money press? Would my return be better, about the same, or worse? Well, credit put verticals each week with a $5 spread, your potential profit would be about $1.32. Now, there are pros and cons to each approach. That's what we'll be covering in this week's deep dive on Thursday's webinar. Lots of good stuff coming up. And just to give you a taste sample, we've got our next data session starting on April 20th. Now's the time to sign up because you want to get in before we reach our maximum capacity. We have scheduled our live format, our live event for November 1st through the 3rd. It's a special one because it's right here in my hometown. You're going to get to see what East Texas is all about, including the great barbecue, outstanding blues musicians in the area, and the Rose City Festival. Plus, the event is where you're not only listening to a lecture, but then you get to go and practice with a team what you've just learned. Check us out on the links below.